today was a day of two specific sectors. This is a new dashboard that I built today because of the volatility in this sector and the upcoming interest, railways. Everything literally was up. TCI maybe is a misfit here. And the other one was investment banking. This sector has been at the top of sector returns for more than a week now. Just like IT has been hitting new highs, there were four new highs here also. And this railway pack just got started today. There is so much distance to cover for 52-week high. Look at the volume rockets. Here also, both these sectors were rocking and there are a lot of stocks lying around, especially consumption stocks where suddenly people are seeing value. There is some demand coming, and today in the Nugget section, I'll talk about 5 specific stocks that are tagged with consumption, which I am happy to hold. In fact, I've been averaging down or not selling at least in these specific stocks. Nifty 50 slightly more optimistic than yesterday. Last 4 weeks, we have perhaps seen Reliance in the bottom 5 more often than not. To give company to Reliance was SBI, HDFC Bank, NTPC and Adani Ports. However, the size of the pull was not as high as the size of the pushes, and the stocks that were pulling Nifty up were Bajaj Finance, Infosys, Trent, Ultratech Cement and Bharti Airtel. The next lot also was all consumption. Bajaj Finserv, Asian, Nestle, Maruti, Britannia, Shriram Finance. Consumption was looking pretty today. Next 50, the overall market bet was more or less same as yesterday. What was at the top today? IRFC, Vedanta, Havells, IRCTC, Jio, 2 railway stocks in the top 5. There were few sectors which were absent today. What was taking the markets up was food and tobacco. What was pulling markets down? Power, oil and gas, insurance, banking, and right now maximum money is being made in the investment banking sector. Now Nifty as well as Bank Nifty may look a bit volatile. Nifty slightly up, Bank Nifty slightly down. However, the trading range was not very high, 0.4%. Same with Bank Nifty minus 0.35. Next 50 and IT of course made new highs yet again. This is their daily business these days. And one more stock which does its daily business with due diligence, that's Reliance in the red and down. No support for Reliance. Last 4-5 days only one good day. And Nifty stocks are trading at a very low volume right now. Bank Nifty all red today. In general, the banking part was not looking good. IndusInd tried to break free today but gave up all the gains towards the end. It did not matter much whether the bank was private bank or public today. Few exceptions. Karnataka Bank, that was up a lot, 4.2%, and I bought a bit of it today. See here, public sector all red. Most of these banks traded with volumes between 25 and 50%. The sibling sector, which had a lot of interest and very high volumes, that was investment banking, no reds, 4 all-time highs. Today, Motilal Oswal bounced back 3.5%, but usually Motilal Oswal's gains are not sustained beyond one day these days. NBFCs are increasingly looking good. This sector was beaten down a lot. There is value emerging that is reflecting in high volumes also. Look at the pattern of PFC and REC. Now there are few more entries today. Piramal Enterprises, we have Jio, and we have the complete Bajaj pack now. Bajaj Finance, Bajaj Finserv and Bajaj Holding. Bajaj Holding made a new high. Defense is moving up steadily. Zen Technologies is hitting a new high literally every day. The shipping companies are silent. That is why you don't see 5-7%, 10% kind of gains. But in general, the sector is moving up steadily. That is why you are seeing that at number 3, number 4 in wealth creator list, literally every day. This sector is typical FOMO. Retail will come in when the stocks are already very high. Oil and gas space is not going anywhere. That is because Reliance is down more than up. Oil marketing companies are still doing okay. See the pattern of HPCL, BPCL. Slowly they are inching up. In fact, IOC also 1 or 2 down days, but in general the pattern is up. Renewables continues to rock. Premier hit a new high. I'll talk about the consumption sector in the Nugget section. However, let me take you through this new dashboard, which is railways. IRFC, which is the finance arm or the SPV created to finance railway projects. RVNL, which is the second largest construction company in the country dedicated for railway projects. IRCTC, IRCON, Container Corporation, TCI, Rights, BEML, the wagon companies, Jupiter Wagons, Texmaco, Titagarh, and KNR Construction, Railtel. This sector was on fire today. Jupiter Wagons 11% up, Texmaco 5%, Titagarh 7%. We are in December, that too not December end. The railway budget is in Feb. It seems that maybe a large fund or someone did a lot of buying today. Look at the rockets in volumes. This is in anticipation of rally. This is pre-budget or pre-budget in some ways, where someone bought large quantities because they know that retail typically buys a lot of railway stocks ahead of the budget. Some of these volumes were actually huge, plus 265%. This is 3.75x. Same number, plus 100%, plus 125%, plus 172%. Look at Titagarh, nearly 10x volumes. Jupiter Wagons, 30x. Now, tomorrow could be a profit booking day. My personal feeling is that tomorrow will be a FOMO day. Retail will come back and buy railway stocks. If this was a fund, then those funds will not sell tomorrow. See here, so much distance to cover for 52-week highs. Hardly any greens or highs here, only one, TCI. Now, FIIs today are back to selling, 1000 crore sold, but the net number is still good. DIIs bought. Next 50's pattern is looking best. Same with IT. And there are two mega IPOs open right now, Vishal Megamart and MobiKwik. MobiKwik, in my opinion, is a reasonable company. However, it is late by at least 1 year in terms of hitting the IPO. I am happy to see this particular news because my gold theory that is being vetted in some way. Gold ETF see nearly 4x surge. I have sold a lot of family silver, a lot of stocks that have not done well. I have not touched my gold and silver at all. And gold is again going towards 80,000, silver going towards 1 lakh. Meta is $1.5 trillion, Berkshire hovering around 1 trillion. And if you get Bitcoin here, then Bitcoin is 2 trillion. I've been evaluating defense companies. There are a lot of them. I don't understand the business model for all of them. Paras Defense, I like the stock. It is a very small company right now. I've just bought one unit for now to test it out. But if this stock falls, then I'll probably buy larger quantities for a larger period, maybe for several years. I bought a couple of railway stocks, IRCTC and RVNL. RVNL actually I bought a lot. And I bought Karnataka Bank a little only because I was again out of money. There are a lot of things happening in the consumption space. One is prolonged and huge monsoon and rains. This has impacted a lot of crops and specifically stocks like Asian Paints, which require dry weather for painting to be done. There is a lot of disruption happening around the industry. Say, for example, quick commerce. There is general belief that people in India are no longer looking for cheaper products, they look for 10-minute delivery. Totally wrong. India loves 10-minute delivery, but they also need prices. Most people check on Swiggy and Zomato both. They have subscription of both and they buy from the cheaper place. India is very cost conscious and DMart also now has online delivery. Everyone right now is sulking because the cost increases, the inflation, the real inflation in input cost has been very high for the entire industry. And the companies like Nestle, which decided to pass these costs to the customer, their sales have gone down. The customer confidence also is low right now in terms of the job scenario. There are layoffs going on silently in the industry, especially the high-end industry. The net new job creation is low. FII money is not coming, the fresh money, and inflation is eating a lot of savings right now. Microfinance stock prices are suggesting that the rural, which is the largest part of India, that is not doing well at all. Analysts right now, be it on TV channels or portals, they are hyperactive. Q on Q, the results are bad. They didn't meet analyst expectation. How did you calculate a 14% expectation or 12% expectation? How is 13.5 so bad that the stock should fall 20-30% compared to 14% which you expected? The maths and statistics is fine. But most industry has no obligation to do a financial exercise or a statistical exercise to meet these numbers with precision. Retail is expert at panic. Many investors are new. Everyone has access to ChatGPT and similar tools. Everyone is smart. Everyone can, for example, ask GPT to tell them which stocks to benefit if the budget is good, the railway budget. That is why you'll see certain stocks are up a lot, other stocks are not. Search results are same for everyone. Now let me quickly take you through 5 key stocks that I am holding right now. I am not willing to sell them. I'll probably ladder them, may average also if I have spare money. I'll first go to auto. Here I have a pick which is not there in my portfolio yet. I might buy into it. Maruti. For decades, Maruti has been associated with value. So right now with sentiment down, if people have limited purse size and they need to buy a car, then Maruti is the most value for money car in general. Mahindra has evolved a lot and most of the Mahindra cars are expensive. Tata Motors has fallen a lot. There was a wave of EVs that has died down. Bajaj Auto bikes are slightly costlier, but Bajaj also is now in EVs. They will compete with Ola. I still own Bajaj Auto. That's the only auto stock that I own. Maruti not very far off from where it started the year, not very far off from 52-week low. In fact, ever since the fall started, Maruti has not recovered. The 50 DMA is below 200 DMA, typical sign of bearishness, neither overbought nor oversold. Next, let me talk about Nestle. It is a red stock right now. So Nestle is very close to its 52-week low. In fact, lot lower than where it started the year. The 200 DMA is above 50 DMA. 50 DMA is pointing downward, not even upward right now. The stock has just come out of oversold territory. Nestle I still hold, however, Nestle globally is facing problems. I think it's more of a leadership crisis, a pricing totally gone haywire across the world. It is very hard to reverse it right now. So Nestle will perhaps have to wait for the inflation to cool down, or they will have to aggressively reprice their products, which will eat into margins further. So it's a sales versus profitability debate or dilemma for Nestle right now. I am not selling Nestle, but I am not buying it at all right now. I will probably hold on. If I get a good opportunity, then Nestle I'll probably sell and buy something else also. The losses are huge and I have 5 units, so it will be a lot of blood in general if I sell. One thing to note is Nestle is not very far off from 52-week high, though it has fallen a lot, 25%, not that big a deal. Now, Varun Beverages was beaten down because of the cola wars with Reliance. Today, there is news that Coca-Cola has sold its India business to the promoters of Jubilant Group. So, if Jubilant Group right now is spending quality money, 5,000 crore from their purse, note that this is not the stock Jubilant, this is the promoters of Jubilant, then obviously they don't fear Reliance Group so much. I don't think there is a lot of trouble for Varun Beverages, but I did sell Varun Beverages, a part of my portfolio a few days back. I might right now sell Varun Beverages more or even exit, but that will be temporary. That is because Varun Beverages might get a resistance here in crossing somewhere around 700. It is approaching overbought zone. And this quarter is never the strongest for beverage industry in general because it is cold across the country. I'll probably give Varun Beverages some time to consolidate, and maybe if there is a general fall where everything goes down and I see this stock somewhere around 500, I'll lap it up and refill. Britannia is one more stock that has been beaten down out of shape. It is literally at its 52-week low where it started the year. The 50-day moving average is right now above the stock price but approaching the 200 DMA aggressively. I don't think anyone is consuming less biscuits and Britannia is the default for most because of any recessionary problem. Britannia's 10 rupee pack of Good Day is the best seller. Probably 40-50% revenue comes from that. And Britannia is a brand, most of the manufacturing is done by contract manufacturers. They will face the heat. So I don't even think Britannia will face the problem of Nestle where their pricing will go wrong for their key products. I continue to hold Britannia. I'm not going to sell it. I might buy it if it falls more. Asian Paints, the graph looks terrible. It is at a 52-week low and way lower than it started the year. Terribly oversold. There could be a dead cat bounce anytime because of the oversold nature of the stock. My personal feeling is that Asian Paints problems are mostly because of monsoons. I don't think they have lost market share at all. in general, there could be demand compression in the paint industry, but that will reflect across the board. In fact, I mentioned it earlier in the videos also, Birla Opus may face the heat more because they are doing a lot of capex. That is not happening for Asian Paints. In fact, Asian Paints is moving up in the value chain. It is launching new and new products across the board, not just paints. That is going to lead to higher sales and better margins. And Asian Paints has a fantastic cash flow. And they also, in my opinion, have dealership loyalty with them. That is very hard to change in this industry. If this was useful, let me know the stocks you want me to cover more. I'll do a version 2 tomorrow. But there is buying happening in this sector. If you are not buying right now and you do like the stocks, you might get a FOMO very soon. Thanks for watching. I will see you tomorrow.